Good morning, everybody. Today is the 15th day in the month of December 2021. My name is Heritage Adisa, market analyst at HotForex. And quickly, we'll check through the markets. First of all, check out what the dominant sentiment is, the overall mood in the markets, see if there are opportunities, and then how we can take advantage of it. But please do not forget that this is just a communication material, and nothing in this communication contains or should be considered as investment advice or recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning in terms of the overall, market environment is another mixed start to the day. It's the FOMC day, it's the Federal Reserve Day, and then markets, like we've said all week, heading into events like this, you can expect markets to be a little bit more jittery, heading into event. Nobody really wants to take anything massive in terms of new positions before a key market moving event, later in the day. For now, we're having a mixed start, but even though we had mixed starts, on Tuesday as well as on Monday, you realize that most of the time, towards the end of the day on Monday and Tuesday, we had risk of flows, right? Now, it's not really a surprise as markets expect, faster tapering going into the meeting, expect even, calls for sooner rate hikes. And then that obviously is not good for equities, it's not good for risk assets generally. But even when we have that, one thing you want to also consider is the fact that we had a flat start to the day, or the fact that we do have a flat start today, does not really mean that it might, last like that till the end of the day. So yes, we have a flat start, a mixed start right now, but still keep a very close eye on markets as things might, still change towards the end of the day. Earlier this year, we also had, flush of data. We had Chinese data, weak Chinese data from unemployment as well as retail sales. Yes, but the AUD seems to just ignore that. We also had, US lawmakers, right, passed the bill to increase the US debt limits, right. Also, that was also, on the wires earlier. We also had another hot inflation print as well from the UK, where, inflation data was also high as well. But all of this failed to move markets, failed to move anything across the board. And then we have that. Now, I had this written earlier. I said equities also trade flat to start the day. It's been like that for the week, starting flat as well, even though later in the day, risk of flow started to develop. Yes, it wouldn't be a surprise. Yesterday, the culprit for that was US, PPI hot prints as well. That was the culprit for, the downside we had in equities. But there's that to watch out for. In today's session, it's still flat, and then we'll look at that even more as we go on. The US oil as well, now currently trading lower, broken down below, the range that we had from early last week as well. We'll look at that in a bit. The bonds stick higher, that's US bonds, while VIX trades mostly lackluster, right? Moves ahead of the FOMC meeting are still very lackluster. And then for FX, trading a lot mixed. We have the antipodeans on opposite sides of the leaderboard, where we have AUD leading the FX majors, despite the fact that we had weak Chinese data, and then we have NZD, lagging amongst major FX, maybe in anticipation for, the later quarterly GDP that data we have later in the day. Markets are expecting weaker number contraction. Maybe that's the reason why we're having, that weakness in, the New Zealand dollar right now. But in terms of the moves, they're really marginal. I mean, the difference between AUD and NZD is just about 0.20%, right, as of now. So nothing really to hold on to on that front. Let's quickly look across board. And like I was talking about the equities, for example, you can see in this session as well, also trading flat, in the day ahead, just as of now, right? And then if you look across board, like it looked like yesterday we had a similar start. On Monday as well, we had a similar start where we had a flat start of the day, but later in the day, risk of flows eventually, develop. Now, it's not really a surprise because in anticipation for a more hawkish Fed, it's not good for equities, and then we are seeing that flow. So it doesn't really mean the fact that we're having a mixed start right now that will last throughout the day, right? If we get a more hawkish Fed, obviously we could see, or we should see, further downside for assets like the US 500. If you look across board, the equities, a similar story across board, all having that same story, and it's what we still have, or what we're still having for now. So for now, because of the mixed environment, being prudent would be a good way to go before we get any key data releases for now. If you look at oil, for example, as I said, we've been trading in recent ranges, from early last week thereabout, we've been ranging. But yesterday we broke below this. We tested it, and now we're trading lower than the $70 per barrel level, which was, the support for the pair for the asset for a while now. Now, with yes, we could talk about Omicron fears, supply constraints as a headwind for oil prices, but I don't expect that to really weigh on oil for too long. Although if we get a more hawkish Fed strength in US, that could weigh on oil prices as commodities have an inverse relationship to the dollar. We could look at it like that. But for now, I think being prudent would be a better way to go about this. I wouldn't want to be in a hurry to, change how things are right now. Apart from this, you look at the bond market, for example. Right, trading, yes, overall still within yesterday's ranges. I mean, nothing too much going on, but inflation is ticking higher, right? If you look at, the VIX as well, still really lackluster for now, above the 20 level, which obviously says that there is now more fear in markets, and that's not really a surprise as we head into the FOMC where a faster taper is expected. Now, from this FOMC meeting, since it's the key focus for markets, what do we expect from it? First of all, markets are expecting the Fed to come out more hawkish from Fetcher Powell's, comments earlier, right? Early, I think last week thereabout, right? He had, he said from his, testimony that, it's appropriate for the Fed to start to talk about or discuss the chance of a faster tapering, right? Now, that is super good for the USD because you're reducing supply, and we reduce supply, that is also good for price, right? And then if we get that, currently markets are expecting about 25 to 30 billion, tapering efforts right now to taper by that amount, even though currently we're tapering by about 15 billion, right? If we get that, that would be super good for the dollar. And then markets are expecting all of this to wrap up by March 2022, which if we get anything close to this expectations or anything around this expectation, we could see the dollar really push higher from there. We talked about USD from our opportunities for the week ahead on Monday on the top radio show as well. And then we said that this is a key level to watch out for, this key 113.5, and then since Monday we've really bounced off it on Tuesday. Now we're keeping elevated from here. If we get a more hawkish Fed, we talk about tapering even higher, right? Tapering faster, even to close or end even sooner, and then chances of rate hikes from dot plot, right? Even more, about 2 hikes. If you get anything closer to 2 hikes from 2022, or even better still, 3 hikes in 2022, that would also see USD push high. This would have been the key level to watch out for, but then we could see it push towards this 114 level right here, right? Apart from this, Euro US is also another one to look out for. I really do like this as well. And then we marked out this key level around 1.13 as the key barometer for the downside here on this pair. A hawkish Fed as well would give us more here, and then we could see further pushes to the downside from this particular one, right? This was already the trigger from yesterday, but right now I will still be more patient. Right now we're testing the 50 moving average to the downside. Tested it, we're pushing lower. I like this. I like to pay attention to this, but the Fed will be the trigger if they give us a more hawkish tilt. I would like this retest and then further push it to the downside from here. Target level around here. I mean, nothing says we can't really retest this 1.12 level to the downside into this, but clearly we're going to clear out 1.125 on this front. Now, saying that, we could look out for something like strength for the USD against CHF as well. We could look at that as another one to watch out for. If we see a more hawkish Fed, this key level that we have right here that has served as support, resistance over time around 0.925 could be another interesting level. We could clear out this one to the upside, retest it, use it as a springboard, and look for further pushes to the upside on this front. But my attention now would be on dollar in the day ahead, and then we'd like to see those currency pairs because of divergence with central banks there on that front. Now, leaving this in the calendar ahead, we are expecting a whole lot more in their head. I mean, we already had, inflation for the UK, which came out hotter. We're expecting later in the day, we're expecting retail sales for the US, right? Even though we're expecting lower prints, but if we get a lower print, I don't expect too much, as markets would still want to, wait for the FOMC before we take anything major. But it's also key to watch out for it to be a key input, right? For markets, so watch out for that. We're also expecting inflation for Canada. Now, if we get another massive beat here as well, that could really see another tailwind for the Canadian dollar, on the back of that. Apart from that, the BOC governor is also on the wires, and then we have the FOMC meeting, which is key, going to be an interesting one. Rates expected to be the same. Like I said, focus will be on tapering efforts, either faster and even to end sooner, right? And as well as the dot plot, looking at further interest rate hikes before, earlier than markets previously expected. Finally, we're going to be having, quarterly GDP for New Zealand. Yes, markets expect a contraction, right, in the third quarter. If we get, markets have expected it for a while, so I don't expect this to be too much of a negative surprise, right? The first quarter is expected to be better. So this is just Q3 print. So I don't expect too much reaction from here. But in the day ahead, focus will remain on the FOMC meeting. For now, it's a mixed environment. For now, we have equities trading lacklusters, FX trading mixed across board. And I think before we get the FOMC meeting, we will not see too much. Remember, expectations there is for FOMC to come out faster in terms of tapering, or come out to announce faster tapering, as well as sooner rate hikes before the end of the day. So that's it for now. We're going to leave it at that. If you have any questions, please do not hesitate to ask. I would always do our best to help. Thank you. Do enjoy the rest of the trading session. Goodbye for now.